It's 9 a.m. in Hong Kong. You're watching the China Show. I'm Annabelle Droulers with David Ingles.
Good morning. We are counting down to the open up markets here in Hong Kong. Let's get your top stories today. Asian stocks trading cautiously even as U.S. inflation numbers supporting bets on a deeper path as far as Fed cuts are concerned. A darkening earnings outlook threatening Chinese stocks bull market as traders go on holiday.
President Xi stressing stability in his Lunar New Year message after touting domestic demand as the main driver of economic growth.
Also ahead, Meituan in focus this hour after the company warning of a $3.5 billion annual loss for 2025. That's as China's food delivery price war intensifies. Authorities summoning major platforms over pricing.
Plus, our exclusive with U.S. Secretary of State Marco Rubio at the Munich Security Conference, warning Europe about Western decline and touting U.S. engagement with China.
I think it would be irresponsible for great powers not to have relationships and talk through things, and to the extent possible, avoid unnecessary conflict.
Good Monday morning from the Asia Pacific. Welcome to the show. Lots to talk about. Not a lot of markets are open. Sort of the key themes, though, remain as it pertains to what you're seeing across the markets that are up and running today. So we're looking at a slower start to the week. That is, of course, we're still coming through as well as far as tailwinds coming through out of the U.S. Cooler inflation numbers might not change the path in the Fed, but you're looking at bets around the first or the next rate cut around the Fed. July, maybe you could make the case for June, but that's still not clear at the moment, though.
Yeah, that's the U.S. story as we enter the week. I think, though, the one for China is looking pretty different because we're into the Lunar New Year holiday break, and I think there's going to be a lot of questions over the next few days. Exactly what are the markets going to look like when we get that reopened? Because there's been quite a lot of news events coming into that break. You know, you had Beijing summoning the platforms. You've got Meituan as well, warning of those losses you just mentioned.
Yeah, quite a big number as far as Meituan is concerned, the prelim numbers that they've come through as well. Not that that's new news, but it simply underscores the earnings wall that we're about to hit. And it's not as if these markets are dancing with upward momentum, right? We've seen, prices come off substantially. I think we'll show you a chart later on the 200-day moving average. We're testing that for the first time since Liberation Week and back in April. On top of that, geopolitics, we had a Munich conference, of course, on the weekend. And on top of that, there was a list very briefly, and then it was taken off. But what do we do with that information? Markets did react to that, though, when you look at Alibaba, Baidu, and the like on Friday.
Yeah, this was extremely confusing. A bit of a head scratcher, really. Yeah. Section 1260H. This is the Pentagon list. It names Chinese firms that the U.S. purports to have connections to the U.S. or Chinese military, rather. And yeah, we had those names that were included just very briefly. Then the entire list was retracted, and now it's considered to be unpublished. But of course, that information is in the public domain, which really brings about that question of, is there any agenda behind this?
Right.
And you're getting very close now to that meeting between President Trump and Xi. And what's the real intention of this, if there is any intention at all? But yeah, big question marks over that one. And then, of course, just a couple of Hang Seng index changes as well. Yeah,
so the benchmark becomes a little bit bigger as far as the additions are concerned there. So we'll talk more about what that means. And, that really comes against the backdrop of really an important feature for the week, which Bell pointing out, right? A lot of closed markets, no stock connect as far as Hong Kong and mainland China are concerned. That's throughout the week, so no mainland markets are trading. We are just operating a truncated session here today in Hong Kong, so we don't have an afternoon session. We will be headed into the lunch break, which would mark us going into the year of the horse. Tomorrow, a lot of other markets, as you can see, are shut as well across the region. And not to also mention the fact that the U.S. markets are shut for President's Day. So obviously, don't have cash treasuries trading there as well. That is just to say the markets that are open are uninspired. You look at the Nikkei right now, off about 0.1%. U.S. futures slightly to the upside. You have Singapore coming online. Right, how does the dollar look on the back of that plummet we had in yields on Friday and the dollar? We are coming off a sharp weekly decline on the U.S. dollar. 2-year futures coming up on your screens. When you look at a 2-year yield, specifically 3.5-year low, September 2022, last time we saw yields at these levels. Gold did top 5,000. We're giving up some of the gains right now. A couple of names to track going into the open today here in Hong Kong. We talked about this. Alibaba, Baidu, JD.com on the platform story. Meituan, obviously, we talked about that too. A50 futures and the currency markets coming online. And dollar China, there we go, 690 as far as the Chinese currency is concerned.
Right, let's get to another news event because we had Chinese President Xi Jinping emphasizing a focus on high-quality growth this year. That was in his annual speech before the Lunar New Year holiday. It's the second consecutive speech where consumption and innovation-led growth were named as priorities. For more, let's bring in our Chief North Asia correspondent, Stephen Ingles. So, Steve, tell us what else? What else stood out in these speeches?
Yeah, so there was the speech on Saturday ahead of the Lunar New Year holiday. The top leader in China traditionally does that. So you have to kind of look at what he said last year as opposed to this year, as well as we got also a readout from the top Communist Party journal, Qiu Shi, I should say, essentially outlining similar things, but that was from a December meeting of the Central Economic Work Conference that was just published today or over the weekend. So essentially it's saying the similar things, broad brushstrokes, but when we look back at the New Year's address back in 2025, this time last year, they talked about diffusing risks in key sectors. They talked about external shocks. Those specific verbiages were not included this year. This was more about social harmony and stability. Keep in mind, the Chinese economy came through 2025, a very turbulent one globally for trade, pretty much unscathed, but essentially with still the pressure to rebalance. Look at the trade surplus. It was a record, okay, despite those trade headwinds from the United States and the tariffs. So they're feeling confident, but they need to rebalance. They need to rely less on exports, less on property, more on AI or innovation-led investment, and of course, just consumption. Domestic demand. And that was a common theme through both of those. I mean, he talked about all the things about opening up further, green transition, ending the price wars in many sectors like EVs, batteries, solar, stabilize the property market, and again, employment for migrants and for recent graduates. But again, very short on specifics. And it begs the question, what do these two speeches, which are very important, we have to read and kind of parse the words of Xi Jinping, but what does it mean for stimulus? Because by all indications, they're not going to be opening the floodgates for stimulus this year.
You know, when you look at the economy, it's really exports that held things up last year. And the reason I bring that up in the context of geopolitics, you know, protectionism is going to make it more difficult for China to lean on exports for growth. And, right. You know, you have the Munich conference, of course, where you had Wang Yi and Marco Rubio. What is the sense we're getting, Steve, in terms of that truce holding up ahead of that big meeting between the two presidents in a couple of weeks?
So if that's going to happen, and the White House has not confirmed, but they're all, of course, putting in the legwork right now to make it happen, maybe the first week of April or sometime in April, with Trump going to Beijing to meet with Xi Jinping. Now, they're going to want deliverables. Both sides are going to want deliverables. So it behooves both of them to lessen the tensions, maybe, as the U.S. Trade Representative Jamieson Greer earlier had said, maybe we're going to be starting working on some of the second-tier issues so there can be deliverables. Those trade frictions are still very much there. There is a truce. Maybe they're going to formalize that truce. That could be a big win for both sides. But again, in this exclusive interview that John McLathwaite, our editor-in-chief, had with Marco Rubio on the sidelines of the Munich Security Conference, asked him directly whether he was concerned, Rubio, whether he was concerned about, you know, Mark Carney and Keir Starmer and Friedrich Merz and all these traditional American allies going to Beijing, striking different kinds of relationships, whether he perceives that and is concerned that that indicates a drift of the allies perhaps away from the United States. This is what he had to say.
In this very forum yesterday, I met with my counterpart, the foreign minister of China. So we expect nation states to interact with one another. I think it would be irresponsible for great powers not to have relationships and talk through things, and to the extent possible, avoid unnecessary conflict. But there will be areas we'll never agree on, and those are the areas that I hope we can work together on.
So Marco Rubio speaking with John Micklethwaite. And again, just a separate story, but very much intertwined, and that is Wang Yi also warning the Japanese Prime Minister Takaichi about the ghosts of militarism. And again, that is a delicate situation that Trump and Xi no doubt will talk about if and when they do have that summit.
Steve, thank you. Stephen Engel, our Chief North Asia correspondent there. Let's have a closer look at markets as we go into the session today. Truncated one, MSCI China, chart coming up on your screens. We talked about some of the pre-announcements around earnings, so Meituan's one to watch. It's underwhelming earnings against the backdrop of momentum that's lost a lot of steam here. 3 circles on your screens. First one would be that test that we had following elections, tariff news, and then you had a DeepSeek moment pushing us up. We're back down because of Liberation Week. We went all the way up towards September, and we're now back to that support level. We tested that. We bounced off it on Friday. Let's have a look at the outlook for today and in the coming week. Joining us here on set, Sang-Mi Cha out of Hong Kong, of course, our Asia equities reporter, and also a look at earnings, closer look at earnings. Catherine Lim joining us out of Singapore, our Bloomberg Intelligence senior analyst. Sang-Mi, let me start with you. What do these pre-announcements around earnings tell us about expectations, how high the bar is?
Yeah, so, this negative earnings alerts that we have been seeing, it's outnumbering the positive ones by 15%. And that compared to the second quarter when we saw 4.8% of the negative ones, it's a huge deterioration that we're seeing. And we see this massive bifurcation in the region, right? Take an example of Korea's benchmark, which is up 31% this year. Taiwan is up 16%. But MSCI China, just like you said, is less than 1% up this year. So you see this huge spread with its regional peers. And all of this ties back to the earnings, right? Because the weak demand is the culprit here. And the GDP growth has slowed. And the government has come in to actually crack down on margin financing, which has been, it's really a big impact on the market. And also, they have scaled back a lot of these stimulus, like trade-in programs for cars and home appliances. So all of this is weighing down on these companies. But of course, there are opportunities. There are the miners like CMOC or some of these software names like iFlyTech. They have been actually putting out some good results. And they're saying that, when it comes to trading China now, you have to be as selective as you can.
Catherine, I'll bring you in then, just referencing some of those earnings warnings. I mean, Meituan has been one of the most significant with that warning of a biggest annual loss going back to 2021. So just how bad exactly is it going to get?
Yeah, Annabelle, it doesn't come as a surprise because if you look at the numbers itself, it's actually meeting largely what consensus is looking for. More importantly, that's after a whole series of downgrades and cuts that we have seen through 2025 and even over the last 2 months. Just to highlight, I think the key thing to note from Meituan's announcement is that the losses for the core local commerce will continue in the first quarter. And if you look at consensus numbers itself, they are now expecting double the losses versus what they did 2 months ago. So the real question, I think, come March, when the company is speaking about, their results is how much more downgrades should we be expecting for 2026? Because we've actually seen how Alibaba is actually still fighting back when it comes to, getting, Qwen involved in its ecosystem and getting AI assistance, into its apps itself.
Yeah, Catherine, I'll get your reaction in a moment to this next bit we're going to get into right now, because the consumption story, the cycle that we're in, the earnings story, price cuts, and we're back here. And you have the big platform companies being summoned, Sang-Mi, on Friday. What can you tell us about that, around pricing specifically?
Right. So they have been saying eliminate the involutionary trades, So what they're focusing on here is, all these companies have been doling out coupons and, really sharing free milk teas and so on. And all of this is actually exacerbating the whole involution that the government has been trying to tamp down. So it's all the anti-involution drive that the country is going for. And so that's why we are seeing Alibaba and Meituan. We're watching very closely at Open today. But it's been something of a common practices now. We saw Trip.com and Tongcheng also were summoned. So more and more of these regulatory summons have become a normal thing right now.
And Catherine, the admin guidance coming through from officials, how is the private sector adjusting to these guidelines?
Right. The series of guidelines that we have seen, and as Sami had actually highlighted, we've been consistently seeing companies, platforms being summoned left, right, center, to talk about things itself. I think the reality is that this is such an important engine to China consumption right now that the authorities are regulating and putting in more structured frameworks to pricing, to policies, to practices. And this will continue to be a thing for 2026, particularly as the state councils, they have actually highlighted last week. Platforms, they will be one of the core drivers to consumption this year as well.
Sangmi, aside from this story to watch for the Open today with those companies, we're seeing the Alibaba, Baidu and others, Meituan rather, but the other companies we're watching, or the other theme we're watching is that Section 1260H list. What exactly happened here? And we saw that market reaction. Do we expect it to translate it all into the session today?
Yeah, a lot of coincidental names here. But Friday night, we saw the Pentagon added Alibaba, BYD, and also the Baidu here to that list, right? And they're saying that these companies have links to the Chinese military. And of course, these companies have come out with announcements saying we reject this announcement and we have no links to the Chinese military. And because they're all publicly listed companies that are doing and have products that are just publicly traded, right? So all of this has been a shock, but then minutes after they retracted and said it was unpublished. So this is coming right ahead of the state visit from Donald Trump to Beijing in April. So all of this, there are a lot of speculations here, but this list, it was first published in 21. It has about 130 entities, the Chinese entities that do businesses. We do not know, we cannot confirm, but it's more and more so has been, Washington has been pressuring Beijing using this list.
Well, it's a list that perhaps we can attach a higher degree of confidence on is the new list on Hang Seng Index, right? What's that new inclusion looking like?
Right. So the Hang Seng Index constituents are now 90 members from 88. They have added CATL, the biggest EV battery maker, CMOC, the miner that has been doing really well because of the global commodity prices. And of course, also have removed one of the car, auto-related company there.
Zhongshan Group was removed, right?
Exactly.
Yes.
Laopu Gold was also added because of this gold play that we are seeing. So all of this together for the passive flows, Goldman Sachs is saying is going to add about $8 billion. And we're seeing these shares, we'll be seeing how they're going to trade this morning.
Sangmi, great to have you with us this morning. That was Sangmi Cha there, and also our Bloomberg Intelligence senior analyst, Catherine Lim. And we'll have more market views coming up on the show. We've got StashAway CIO Stephanie Leung joining us in just a few minutes' time to talk about how AI is disrupting the way investors view their holdings. Of course, we've seen lots of sectors being hit by concerns of AI disruptions to very long-standing business models. But we're counting down to the open of trade in Hong Kong this morning. Mainland China is already shut for the Lunar New Year break. But this is a picture here of what futures are indicating to us, maybe some slight upside at the open. More ahead. This is the China Show.
Vice President said last year very clearly was that Europe had made a series of decisions internally that were threatening to the alliance and ultimately to themselves, not because we hate Europe or we don't like Europeans, but because what is it that we fight for? What is it that binds us together? And ultimately, it's the fact that we are both heirs to the same civilization, and it's a great civilization, and it's one we should be proud of. It's one that's contributed extraordinarily to the world, and it's one, frankly, upon which America is built.
That That was part of our conversation. The US Secretary of State Marco Rubio is speaking exclusively with our editor-in-chief John Micklethwaite, and really, as you just heard there, downplaying the chances of a fracture in the US and European alliance, if Ukraine loses the war with Russia. But let's get more on that conversation now, because it did happen on the sidelines of the Munich Security Conference.
The Russians are losing 7,000 to 8,000 soldiers a week.
Yeah,
not wounded, dead. Ukraine has suffered extraordinary damage, including, overnight and again to its energy infrastructure, and it will take billions of dollars and years to rebuild that country. So I don't think anyone can claim to be winning it. I think that both sides are suffering tremendous damage, and we'd like to see the war come to an end. It's a senseless war. In our view, the president believes that very deeply. He believes the war would have never happened had he been president at the time. So we're doing two things. So obviously we continue. Look, we don't provide arms to Russia. We provide arms to Ukraine. We don't sanction Ukraine. We sanction Russia. But at the same time, we find ourselves in a unique position of serving as probably the only nation on earth that can bring the two sides to discuss the potential for ending this war on negotiated terms. And it's an obligation we won't walk away from, because we think it's a very unique one to have. It may not come to fruition, unfortunately. I hope it does, and I think there are days when I feel more optimistic about it than others. But we're going to keep trying, because that is, in the end, this war will not be solved militarily. It will be, in the end, it will come to a negotiated settlement. We'd like to see that happen as soon as possible.
Do you worry that if Ukraine loses the war, it's going to be a disaster for the transatlantic relationship? Because Americans will say the Europeans didn't provide enough arms, and Europeans will look and remember the meeting in the White House and Zelensky and Trump, and they will blame the other way.
That would ignore reality. Look, Ukraine, first of all, they deserve a lot of credit. They fought very bravely. They've received extraordinary amount of support from the United States to the tune of billions of dollars that pre-exist a war. In fact, Ukraine probably wouldn't have survived the early days of the war had it not been for American aid that came to them even before the war had started, with the Javelin missiles that disabled the tank formations.
I wasn't saying it was fair. I was just saying there's a possibility. You have to deal with perceptions.
No, but I'm not worried about that, because I can tell you that I think history will understand it. But I don't think the war is going to end in a traditional loss in the way people think.
Marco Rubio there, U.S. Secretary of State, speaking exclusively with our editor-in-chief, John Micklethwaite, there in Munich. Right, just about 6 minutes to the opening bell here in Hong Kong. Indications are looking like this. BABA in focus. We're down about 2% in the early goings. This is the China Show.
You're watching the China Show this morning. We've got the pre-market session underway for Hong Kong. Mainland China is shut. The north and southbound connects are shut as well. So that's obviously going to affect trading volumes in the session. But anyway, what we are looking ahead to the open is really very much the platform companies for a couple of different reasons. Firstly, they've been summoned for pricing practices by regulators, so concerns still around cutthroat competition in this space. Alibaba and Baidu also named to track because they were added briefly to a Pentagon list in the US on Friday, warning of supposed connections to the Chinese military. Meituan also one to watch. They've been warning of a $3.5 billion loss. So clearly this competition across the food delivery space is having an impact.
Good morning. Welcome back. You're watching the China Show. A lot of markets are shut across the region, including mainland China, so that means no stock connect, not just today, but the rest of the week. Hong Kong shuts early today ahead of the Lunar New Year Eve, and then it's the Year of the Horse that starts tomorrow, so we have about 3 hours of trading, give or take, across the session today. Do expect the volumes to remain substantially lower than usual. We're looking at tech, obviously, this intersection between that Pentagon list that we saw, on top of that, some of the names on that list, and then was pulled out. There was the summoning, of course, of platforms. You had the sort of intersection between those names, and then separately, of course, index changes too on the Hang Seng Index, effective March 9.
Yeah, exactly. And I think really if you take a look at what sort of fits in the middle of that Venn diagram, it's very much Alibaba that's probably going to bear the brunt of that, because not only was it briefly on that Section 1260H list, which is the Pentagon list that's published annually or has been since 2021, warning of supposed connections of Chinese companies to the military there. You also had it as being one of the companies that was summoned by regulators on Friday, and concerns around this continued cutthroat competition that we see between Alibaba, Meituan and JD in the food delivery space. In particular, Meituan, for instance, warning around the impact yet again we're going to see in their earnings from that. But you see Alibaba there that's really dragging down the index so far off around 2%. It does really follow what we had on Wall Street on Friday, because we saw it drifting down as much as around 6%, the ADRs. They did recover, though, as that Section 1260H was actually removed their list, and certainly question marks over to why that was even published in the first instance. But let's actually take a look as well, because you mentioned those index changes we've got. We can take a look at some of the movers on that. So the additions here we have CATL, CMOC, Laopu Gold as well. All of those are moving to the upside. No surprise, of course, they're joining the Hang Seng Index. We're looking for a lot more money to swell into those stocks. What else we have are further additions, and I think it really speaks to that sort of tech focus as well. You've got KE Holdings active in the real estate, online, offline platforms, Horizon Robotics as well. So they're joining the index. Removing it, though, is China Resources, Beer, and also Mengniu Dairy. So, yeah, questions, I think, over that, and particularly because both of those are consumer staple stocks, which I think is interesting in light of what we heard from President Xi with his Lunar New Year address, but really emphasizing the need to try and boost domestic consumption.
Yeah, China is the large markets that I think the 15th five-year plan has started well. That's, of course, as Steve was pointing out, it's a very important policy signal that comes, fittingly in between the Central Economic Work Conference and the NPC, of course. It just happens to be, of course, that you have the holidays coming through. So we'll talk more about that in a moment. But yeah, certainly the overlay there of just how best to phrase this, the preference to lean towards structural reform and policies more than reactionary to weak cyclicals is really a good way to put that when you look at how markets have priced that too. Okay, the other thing we're trying to figure out as well is this AI scare trade, right, from last week. So the very, very long list that's gone from software all the way down to logistics, financial data providers too. I think I'm just looking at some of the phrasing here. It's called software as a service SaaSpocalypse.
Yeah, SaaSpocalypse.
SaaSpocalypse. Doesn't quite roll off the tongue, does it?
Say it a few times.
Okay, yeah. That's going to help. A shot for every time. Joining us here on set to talk is how scared we should be about this early onset of Halloween, Stephanie Leung, Chief Investment Officer at digital wealth platform StashAway. Very nice to see you. Good morning.
Morning.
Let's start off with that. Markets have now compiled this short list of sectors that might get disrupted.
Right.
They've sold off quite substantially. Are we overreacting, or is there something there?
Yeah, I'm not going to try to say SaaSpocalypse, but yes. It is indeed actually burning to a lot of different sectors. Actually, bringing close to home, the wealth management sector was actually the latest one. I was going to ask you about that. To get affected as close as last week. And it was all coming out from, I think, a fairly small-sized company coming out with like an AI platform that would transform how agents are going to disrupt all these wealth management companies. And I think to a certain extent, in short, I think it is overblown in the short term. But, of course, I mean, there are kind of longer-term concerns. So I think the reason why I say it's in the short term it's overblown is because if you think about all these big companies that are using these software system, I mean, it takes years to actually vet a system, to build a system, to actually implement the data layer that supports these systems. And if you put yourself in the shoe of the chief investment officer of a Fortune 500 companies, I mean, is he or she going to say, okay, let's vibe code everything. Let's use these agents. I mean, let's use open call. It's not that possible. It's not that viable in the near term. I mean, at least it takes a few years to experiment, to actually transform, to migrate your systems. And at the end of the day, I think the companies that own the distribution has the moat, right? Because, I mean, you've been dealing with the same Microsoft engineers, the same Microsoft sales for years. It's not so easy for a CIO to make that decision to change. Now, of course, on the other hand, a lot of these big companies are also coming up with AI solutions. I mean, Microsoft is off like 25-30% off its highs because so far it seems like the AI solution Copilot is not really demonstrating its value. But I think this year is the beginning of the year where you see enterprise actually adopting AI en masse. And I think a lot of these bigger companies, they have the resources, they have the distribution. And I think this is where, I mean, we'll see that these companies can actually deliver on what they promised. On the other hand, I think, of course, if you think about kind of the longer term, there is a classic kind of demand-supply side issue. Now, with all these AI agents, what's apparent is that the cost of creating software has gone down significantly. And there's going to be a lot of supply of software. I mean, I can code anything without writing code. I think Spotify's CEO just recently said that they've actually stopped writing code as in the past few months, and the top kind of engineers are not writing any lines of code at all. Anybody using Lovable can actually code up their own thing. I tried using OpenCall to create my agents, and I have now like a few agents working for me on OpenCall. And it's not that difficult for anybody to be able to do that. So if you think about this sort of supply thing, it's a very, very classic supply and demand issue. You have a lot of supply of software, and there is a structural concern there as to, I mean, what it is going to do to margins of these SaaS companies.
Right.
So then I want to ask then whether your thesis around the companies or sectors to look at for AI changes at all for 2026, because I think last year it was very much around the picks and shovels seem still, at least in Asia, of course, because that's where a lot of it's based, but also soaring valuations of foundation models, for instance. This year, do you try and, is it about looking for those companies that can potentially be major disruptors? Because the one in the logistics space, for instance, it's only $6 million market cap.
Yes. I think, I mean, the key word in AI is visibility. I think because AI models are changing so quickly and developments in AI, like kind of the landscape that's also changing every 3 months. The narrative changes every 3 months, right? A few months ago, it was Google, Gemini. Today it's Anthropic. Who knows, right? 3 months from now, it could be OpenAI's comeback. So I think the key is to identify things that are visible. And there's not a lot of that. And I think the most visible part of the whole AI ecosystem is still the hardware, because there is still a lot of bottleneck. We see kind of the memory names, the chips names actually still performing quite well this year. And I mean, that's because there is a bottleneck there. We know that the supply is not going to get resolved in the near term, while demand actually skyrockets with all these kind of new companies starting like their own AI agents and AI developments. I mean, the demand is just going to go up. So I think it's important for investors still to stick with names or sectors or themes that have a lot of visibility, because, I mean, seriously, nobody knows what's going to happen 3 months from now from a software and development perspective.
I mean, the question then becomes, so clearly we've moved now from, was it apocalypse to DRAM-mageddon, right? Is how they're looking at the memory thing. It's visibly showed up in Korea, right? And everyone said there's a clear supply issue there.
Yes.
But is that fully priced now, is my question. Do you still buy a market like Korea?
Yeah, I think if you look at Korea, earnings is going higher. It's accelerating. Valuation-wise, it's still quite reasonable. And I think from a positioning perspective, yes, it has run quite well. I mean, it's actually one of the best performing markets in the past few months. But still, I don't think there's a lot of crowdedness in that trade. I mean, the more crowded trades are probably, for example, the Max 7, which we're still digesting. And also, I think if you look at it from a kind of supply side perspective, there's a lot of IPO that's coming to the US, right? According to different estimates, you could have between like 50 to 200 billion of IPOs coming this year. I mean, just the four kind of biggie, Databricks, SpaceX, OpenAI, and Anthropic alone, that could be 100 billion. I mean, that's 3 to 4 times of what's the IPO market last year. So I think there's a lot of, there's a lot of money that needs to perhaps rotate out of the kind of mega big US names into other things. And I mean, Korea actually sits in a very interesting juncture because I think one of the trades that may play out this year, one of the investment themes this year, which we're seeing to play out, is the kind of cyclical recovery, not just in the US, but globally. And if you think about the beneficiaries of a cyclical recovery, I mean, that's sort of like the industrial side, small caps, which is playing out, copper playing out. Korea also sits kind of right in the middle of that. So I do think that actually Korea presents a pretty interesting intersection of AI plus cyclical recovery.
How are you thinking about China's markets?
Yeah, I think, China market is, of course, it has re-rated last year, so it's no longer kind of very, very undervalued. It's sort of fair right now. And I think what happens to China market depends on the earnings recovery. I mean, are we going to see accelerating earnings growth in the broader China market? Now, if we look at kind of data on the ground, the property bubble is still a big overhang, right? I mean, I think inflation data, the activity data is still quite weak. However, I think there are pockets that are showing accelerating growth. For example, if you look at the IPO markets, all the chip names or AI-related names are very well received. And I mean, China is indeed leading in some of the AI areas. Its latest models, Kimi, for example, is now widely used by U.S. Startups, which shows you kind of, how technologically advanced these latest models are. Of course, needless to say, EV is one dominating kind of, I guess China is dominating in the EV industry as well. I mean, drones, robotics, even healthcare, there's a lot of exciting developments. So I do think that, China is an integral part of a globally diversified portfolios. And interestingly, it is a growth kind of driver, but it's also kind of a hedge versus your UX exposure.
Well, speaking of a diversified portfolio, and I'm going to ask you about precious metals.
Yes.
Gold and silver.
Yes.
Do we need to look at those two things differently? And what's your advice on both currently?
Right. Gold is something that we've been bullish on for the last 2 years, and it benefited our own portfolios in a multi kind of asset way. Year to date, for example, our portfolios are up kind of single digits. A large part of that is, of course, gold. Of course, there is a lot of volatility in both of them, but year to date, gold is still up mid-teens. Silver similarly. I do think that if you think about kind of gold, so we invest in gold, we don't invest in silver in our portfolios because, silver is a much more speculative asset. It's a much more kind of retail-driven asset. It's much more volatile. And, if you think about why we have gold, it's basically a replacement for US dollar or for sovereign dollar. So we don't need to add further beta by adding silver. And, of course, central banks are buying gold, they're not buying silver. So I do think that, having gold is sort of like a core asset allocation. Now, of course, if you just want to spice up things, if you want to have more beta, then maybe silver. But historically, when silver starts to rise, that's kind of when retail starts coming in, and that's where you have kind of near-term tops in both. So, yeah.
Stephanie, thanks so much for joining us
Fantastic.
This morning, and happy Lunar New Year to you as well.
Thank
was
you.
Stephanie Leung there, Chief Investment Officer at StashAway. And coming up, we'll be talking about China's plan to put more than 200,000 satellites in orbit. That's something that risks upending the global space race and squeezing the ambitions of Elon Musk and Jeff Bezos as well. We'll have a closer look ahead. This is Bloomberg. Welcome back. Here are some of the big geopolitical stories we're tracking this morning. French President Emmanuel Macron will attend this week's AI summit in India as the two countries continue to deepen ties. Macron's official schedule also includes a meeting with Indian Prime Minister Narendra Modi. His visit comes after New Delhi approved $40 billion worth of arms purchases, including more than 100 French fighter jets and missiles. U.S. Secretary of State Marco Rubio and Japanese Foreign Minister as well, Tomichi Motegi, have reaffirmed their commitment to deepen bilateral ties. Rubio and Motegi agreed on the need to modernize economic security relations and discuss China's latest trade and export measures against Japan. Tokyo's relations with Beijing have been rocky. That's following Prime Minister Takaichi's comments on Taiwan.
Now, staying on that rivalry between China and the U.S., now China has submitted plans to the International Telecommunications Union here to deploy, get this, 203,000. Yep, that's the right number. There's number of satellites by the middle of the next decade. But our Bloomberg Opinion columnist David Fickling argues that until China actually develops its own Falcon 9, the real power and potential remain in the hands of Elon Musk and SpaceX, as it pertains, of course, to that new frontier. And David Fickling joins us right now to talk us through this. David, 203,000 sounds like a big number, but also space is a big place. How big is that really?
To put this in some kind of context, the thing you really worry about, if you've seen the films Gravity or Elio recently, there's this concept of the Kessler effect, which is the idea if you put too many satellites in space, they start crashing into each other, cause a huge debris field, and you can't use space anymore. Now, By seismics, we're not that far from that point. There was a study last year that found that in the best region of space, there's only room for about 146,000 satellites. Right now, we've got 16,000 satellites. We're adding 4,000 each year. Obviously, here's this plan for 203,000 satellites. We could be getting pretty close pretty rapidly.
Yeah, of course, there's lots of concerns around space junk and that effect, and we do have, of course, technologies being developed to try and mitigate the effects of space junk as well. But do we actually get to that number of north of 200,000, or is China just looking to send a signal here?
Yeah, I think that's a much better understanding of what's happening. Essentially, you put in these applications to this Geneva-based organisation, and there's not a lot of penalty if you don't actually get 203,000 satellites in orbit. Basically, you lose the slots that you've booked. But what happens in the meantime is actually the greater threat for a lot of satellites is not so much the space junk, but the interference they cause to other satellites. And so if you say you're going to put 203,000 satellites in space, the other companies all have to redesign their satellites. That raises costs on them, and that slows them down. And that's the real problem, because at the moment, SpaceX is way out ahead of China and anyone else in low Earth orbit.
Okay, so the big question, obviously, the new space race, China or the U.S., will China overtake the U.S.? What do you think is the early answer to that question?
I mean, I think anyone who's observed geopolitics the last 25 years doesn't want to underestimate China's potential to close these technological gaps, but it's starting from a long way behind. Of that 16,000 satellites in space, 10,000 is SpaceX alone. The Falcon 9, as you said at the top, is the only reusable rocket that can reliably deliver large numbers of satellites at a time. It's delivering like more than 2,000 every year, and China still hasn't really completed testing of any viable reusable rocket, although every month there are new tests happening, and so we might get there. But in the meantime, China is at least 5 years behind SpaceX, and everyone who's betting on low Earth orbit and the potential of these satellites, they're really betting that terrestrial communications networks are close to getting maxed out, and we're going to need low Earth orbit for the future of the internet in the 2030s, the 2040s. Musk is way ahead in this. SpaceX will have has this 1.5 trillion touted valuation ahead of its IPO this year. Judging by the scale of the lead that they've got and the fact that China, with all its sort of technological expertise, is having to resort to these sort of regulatory tricks to try and slow it down, does justify a pretty high valuation on that.
Yeah, and of course, SpaceX just so integral to the US space efforts as well. It's a really fascinating column, and I do recommend people read it. Musk is beating China's 203,000 paper satellites, by David Fickling, our opinion columnist there. A great piece on the terminal and online. But a reminder as well of our new feature. This is the Bloomberg Video Hub. Subscribers can explore live streaming, news, interviews, and all of our Bloomberg TV shows, plus documentaries, reporter analysis, and more. So do check it out at bloomberg.com/videos. This is Bloomberg. Welcome back, and here are some of the top corporate stories that we're tracking today. Warner Brothers Discovery is said to be considering reopening sale talks with Paramount Skydance. Our sources say Paramount submitted amended terms last week, trying to topple the existing deal with Netflix. The new offer includes Paramount covering a $2.8 billion fee owed to the streaming giant if Warner terminates their agreement. Warner had agreed to sell its namesake studio and HBO Max streaming businesses to Netflix in an all-share deal. Australia's Treasury Wine Estates has reported lower than expected revenue, citing US supply chain difficulties and adverse consumer trends in China. The maker of the iconic Penfolds brand reported a $458 million first half net loss that compared with $156 million profit a year earlier. It's also suspending its interim dividend payment to prioritise preservation of capital and reduce leverage. Bloomberg has learned that Ford's CEO spoke with senior Trump officials about a potential framework for Chinese automakers partnering to build cars in the US. Sources say the idea involved joint venture deals in which the US partner would take a controlling stake. The agreements would be structured so both the Chinese and US firms would share profits and technology.
Right. So just for a look at how markets are trading, we're looking specifically right now at Japanese banks, and share prices are getting absolutely waxed today. 3% down today on the banks index. I think we were down as much as 2.5% on Friday on the same gauge here. GDP print pretty much missing the mark across most metrics. When you look at the GDP deflator number, which is more a sort of inflation window, that's what's actually coming in. And you put those two things together, perhaps while you are getting inflationary pressures coming through, the economy is probably not there just yet as far as being able to hike interest rates, and that goes into that conversation. And separately, just one last note on Japan, of course, because in the next hour of the China show, we'll talk more about the currency markets, and what's really been this massive rally in the yen. Is it too far, too quickly, too soon as far as that rally is concerned? HSBC joins us to talk us through that. Very, very quickly, a look at the cash markets here in Hong Kong, 24 minutes into the session here. Hang Seng Tech, Hang Seng China. And of course, from about 2 or 3 weeks from now, the index goes from 88 to 90. There we go, on the back of the changes that were announced on Friday on the benchmark. No volumes today, and that's because no stock connect with the mainland. A lot of markets are shut. I frankly don't know anyone at work today, with the exception of course, the good folks at the Bloomberg newsroom.
Truly.
Yes.
We are here. But anyway, we're going to have a lot more on the way in the next hour. You're watching the China show, and this is Bloomberg. Welcome back. You're watching the China show. Taking a look at the Hang Seng half an hour into the session today, we have the index pretty much split actually between decliners and laggards, or rather stocks that are moving to the upside essentially. But there is sort of a couple of big names that we're watching, and that's very much related to the food delivery giants Alibaba, JD, Meituan. They're really what's dragging down the broader gauge in the session today, even though, of course, should say very thin volumes, given you've already got markets shut in mainland China for the Lunar New Year break. Yeah, I mean, the Meituan story is interesting, right? Because they got summoned, and a lot of, if you ask why they did get summoned, part of that was what they said earlier on the earnings call. There's this massive competition that's taking place, and it's really driving down prices. And, you know, officials, it's not new news, right? That officials have come out and basically guided these companies quite firmly to... And multiple times as well. Yeah. Around, you know, just stop doing it, right? As far as, you know, involutionary price practices are concerned. Also in the theme today, we're looking at some changes to the Hang Seng Index, and we are getting, in fact, market reaction to that, right? So 3 names on your screens coming up shortly will be the 3 names being added to the benchmark from March 9. 1 is being removed, so you do 3 minus 1 to 88. So I'm just complicating things here. 88 plus 3 minus 1 takes you to 90. Oh, gosh.
And I guess I didn't simplify it then, too. But yes, March 9, it goes up to 90. These are the 3 names being added there. We talked about this. Baba, Baidu, JD, and Meituan are all the drags coming up on your screens as well. On top of that, a couple of markets are shot across the region. So the ones that are trading, apart from Hong Kong, you have Japan, you have Oz. Singapore is online as well, so you have A50 futures there if you need, of course, a mainland proxy to the mainland listing. We're not really seeing a lot there. So we'll talk about the banks and the GDP print in a moment there. The macro picture is 2-year yields last traded, 3.5-year low on the 2-year yields. You have the futures coming up, and of course, and gold and silver are doing this on the back of the break back above 5,000 on gold. Okay, let's bring in Mark Cranfield. He's with us out of Singapore. So, Mark, we've sort of laid out the outline for you there. Help us color the market's theme today.
It's very unusual for traders to fight against the prevailing trend when they're about to go on vacation. So it's no big surprise that you see generally underperformance of Hong Kong stocks again today. They've been on a bit of a downtrend anyway, so no one's going to step in front of that just as they're about to go on vacation, especially with China already closed as well. And they'll also be concerned that during the time when Hong Kong is closed, you've still got this threat from the United States, because the AI story is deteriorating pretty quickly in the American market, where more of these themes, whether it's wealth management, logistics, all kinds of AI software. All of that is being attacked in the American market. So it could be by the time Hong Kong reopens later in the week that US stocks are also lower as well. So that will feed back into the Hong Kong story. It's interesting, you were putting up the names there which are going to be included in the HSI. And that may be, if there's going to be reason for optimism, people like CATL joining the HSI, that's got to be a positive eventually. In the short term, all the other factors related to the delivery services you were talking about, that's obviously weighing on it. But probably if there's going to be something to help out the Hang Seng as we look forward, it's going to be these big companies like CATL may help to turn it around. In the near term, though, we've also got to worry about earnings from Tencent and Alibaba. They're coming up pretty soon as well. So the reasons to turn around the Hong Kong market in the short term is pretty difficult. They'll need some very big, pleasant surprises to come out, either of earnings or a big turnaround in the US. Neither of those look likely at the moment, but who knows? The picture may change after the Chinese New Year break.
The other big theme, and David was just mentioning there, but we are seeing that reaction in the financial stocks in Japan today following the GDP print. But you've also been watching the Japanese yen this morning, Mark.
Yeah, I mean, the story is really changing in terms of the yen. I think if you, going into the Japanese elections, people were pretty cautious about the currency, partly because Prime Minister Takaichi herself had made it sound as though she didn't really support the currency, didn't particularly want a strong currency. People on reflection are now beginning to think that was probably election talk. That was there to try and help to get votes for the election. She's done that. LDP have had a big win. And since then, Takaichi's been very quiet. She's allowed the experts on the currency to talk. They sound a bit more supportive about it. And clearly, the fact that inflation, particularly core inflation, is well entrenched in Japan. They can't really afford the currency to be that much weaker. Investors can see that now. So a much more positive outlook for the Japanese currency in the past few days since the vote, and also the feedback into Japanese bonds as well. Japanese bonds declining was feeding into the yen. They were feeding into each other. We've also seen stability in the Japanese yield curve as well. That's helping the JGBs and the yen as well. And the fact that the Bank of Japan, for the moment, the market is looking for 2 rate hikes from Japan this year, and the politicians have not pushed back. That's very significant. And yen traders can see that. There were big short yen positions going into the election. They've been trimmed, but not completely. There are still shorts in the market to be taken out. And that's why, if you look at dollar yen, we're around the 153 handle, and yet we were up at 159 not too long ago. We've come down a long way, and we're holding around those levels. It looks as though the market is becoming much more positive on the yen, and that could stay for some time, particularly when you consider that the Federal Reserve now is looking at probably 3 interest rate cuts this year, not 2, after the CPI data we saw last week.
Mark, great to have you with us this morning. That's our Bloomberg MLive strategist, Mark Cranfield, there in Singapore. And let's get more now on really what was surprisingly weak GDP figures, or that print in Japan, with our senior editor, Brian Fowler, who's in Tokyo for us. So, Brian, how are you reading these numbers just out in the last couple of hours?
Yeah, so the numbers were definitely a little disappointing compared with what we expected. Net exports did not make any contribution to growth at all, even though actual exports rose each month of that quarter. And I think what we're seeing there is that inbound tourism took a little bit of a hit, especially from China. After tensions with China erupted in early November, we saw, of course, China warning its citizens against traveling to Japan, and we actually saw that effect very clearly in December. Also, capital spending was weaker than we thought it would be. We'll keep an eye on that. We will get the Finance Ministry's fourth quarter capital spending report on March 3rd. Those numbers tend to be a little bit better historically than what we've seen in GDP. And if that's the case this time around, I would expect us to see that the fourth quarter GDP numbers will be revised when it comes time to look at them again.
And Brian, does this change or alter the BOJ's course in terms of just being able to hike, normalize interest rates? Let's phrase it that way.
Yeah, well, I think that's a key point there. Normalize interest rates. So, if we were talking about the interest rate, the BOJ actually taking some kind of a restrictive policy, that might be a different story. But in this case, the BOJ has room to hike interest rates while still saying that what it's doing is dialing back the degree of easing as it normalizes policy, as it gets closer to neutral. So the big thing to watch for the BOJ will be wage talk developments. And at this point, all signs are pointing towards agreements on wages that will be roughly more or less in line with what we've seen in recent years. And those are very high wage gains by historical standards. And if we see that come through this time as well, I think the BOJ can make a strong case for going ahead and hiking interest rates as early as this spring. If you look at the movements in the overnight swaps market, on March 19th, the next decision is definitely not a done deal at all, but it's kind of an outside possibility, with many more people looking for something as early as April.
Brian, thank you. Brian Fowler, our senior editor there on the latest GDP print. In fact, just coming up, we'll talk more about the yen with our next guest coming out of HSBC, including that, of course, EM currencies providing more stable, perhaps stable returns. Is that a good way to put that compared to developed nation peers like the yen, which has been, frankly, all over the place the last few weeks or so? Joey Chu joins us to help unpack all of these things for us in a few minutes.
You're watching the China Show, taking a look at how currencies are faring in the session today. It is a pretty mixed picture. Of course, the biggest one you've got there that's moving to the downside against the greenback is the Japanese yen. That's after we had the GDP figures coming in and pretty much undershooting every single forecast on growth. So questions around, does that change at all the timeline for the BOJ's path to normalization? Otherwise, it's really been a story, at least in the Friday session, of dollar declines because we had that US inflation print rising less than expected. So we had the currency down for a fifth time in 6 days. But let's get more on the outlook for FX now, bring in Joey Chu. She's head of Asia FX research at HSBC. So, yeah, we might start off with that direction for the dollar, also the expectations around where the Fed. What do you think? Is the market overestimating the likelihood of Fed easing this year?
Well, yes, if you look at just the data. For example, we're going to get fourth quarter GDP this week, but the GDP nowcast is tracking something like 3.6%. This really doesn't sound like, the US economy is in need of easing, right? And also the inflation, yes, it's a little bit less than expected, but it's still 2.5% on the core print. So from a cyclical perspective, actually the Fed does not really need to ease, but the market still has this easing bias because of a variety of other reasons. So for us, in our view, the dollar still should remain soft due to this other policy uncertainty.
Yeah, I was going to ask you, do you think, when you try to figure out, Joey, the path of the U.S. dollar, do economics matter at this point in time?
Yeah, when we think about a dollar, we use this framework, quite a simple framework, but it's basically cyclical, structural, political. So at any point in time, one factor or another might be more important. It just so happens that right now, the political and structural factors probably matter more than the cyclical factors.
So then what is the direction then that you're expecting for the greenback this year?
Right. So we're saying that, we think that the dollar should still remain under pressure because of these two other legs of the triangle, the political and the structural factors. For example, there's still all this talk about diversification away from the dollar or hedging of the dollar assets. So these are structural forces that will keep a lot of the positioning more on the short dollar side. But of course, as mentioned earlier, the cyclical forces are such that actually the dollar could still remain roughly supported. So all in all, we see dollar in this range bound, but probably more in the lower end of the recent range.
Does the weakness in the dollar mostly explain, Joey, the strength in the Japanese yen? Is where I want to get to here. And, the rally seems to have come too fast, too soon. What do you do with the yen now? Do you fade this rally?
Right, I think the yen has some domestic situation going on as well. So recently, the election seems to have ushered in this narrative that with more of this majority, supermajority actually, so the government does not need to make any more political compromises, and so that reduces the likelihood of fiscal slippage. So that is a good news for the Japanese yen. However, our view is that going longer term, we actually still do not know how this government thinks about fiscal policy, about even monetary policy post-election. So I think there is still a lot of uncertainty that we need to get through. And, time will tell whether there really is more fiscal consolidation or fiscal discipline coming in.
So against that, if you are expecting more volatility, which other pairs are going to be most important for you to be watching for the Japanese yen specifically?
Right, I think for the Japanese yen, it will continue to trade on its own domestic situation. But if there's really an external factor, it will still actually be the dollar, the broad dollar direction, U.S. yields. So that's that. But for the Japanese yen, it actually has quite a lot of spillover effects onto the rest of Asia. So the correlation is the other way rather than from other Asia to Japanese yen.
We've seen, just to broaden the view on, DM versus EM. EM has large, obviously you have, idiosyncratic every now and then one or two, but EM has basically been a lot more behaved. You look at measures of vol, for example. Why do you think that is? And do you think that stasis is something we can trust as far as, because that goes into everything, all things carry, for example?
Right, I think there are two main reasons that's still underpinning this, really strong sentiment towards EMFX or EM assets in general. The first is that there's still this bias, right, from the market for the Fed to ease. That's one thing. The second is that if you look at the data outside of the US, it's actually holding up pretty well. So for example, when we look at data surprises ex-US, it's actually trending at the pace that's a little bit faster than the data surprises coming out from the US itself. So the growth ex-US is actually holding up really well, and that's actually supporting EM assets and EMFX as well.
Okay, can I ask you about the Japanese yen? Sorry, can I ask you about the Chinese currency then at this point in time? Because it used to be strong, weak dollar, stronger yuan. That might have changed, and there are questions around whether or not they were pursuing implicitly a stronger currency policy on as far as the yuan is concerned. Where do you think the yuan heads short term?
Right. Actually, when China goes on long holiday, dollar CNH tends to trade with the broader dollar, with risk appetite, as well as with the prevailing theme for the RMB at that juncture. So, for example, last year, the prevailing theme was, U.S.-China trade tension. So, during Chinese New Year in 2025, actually traded quite weak. However, this time around, the prevailing theme for RMB, I think, is about policy support for RMB internationalization, about supporting RMB as a reserve currency. So I think this will anchor the RMB. We still like the RMB stronger.
Okay, and how do we look at, just using the RMB as an example, because that is a good example of this next analogy I'm going to bring up. So currencies of economies with extremely strong current accounts. So you have the yuan. I'm looking at the Taiwan dollar. We had just that massive GDP print on Friday. And I guess my question is, do those remain drivers of those currencies, or is it down to something else, Joey?
Right, it differs for the various currencies. On top of Taiwan dollar you mentioned, actually Korean won is also another one with record current account surpluses. Right. But as we know, up to recently, Korean won has been very weak, right? So it's all about what happens at the capital account side as well. For the RMB, it's a little bit more special because the capital account is still somewhat a little bit restricted. So therefore, there's still a lot of strength that is coming in from the current account. But for a lot of other Asia currencies, whereby their capital account is very unrestricted already, Korean won, Taiwan dollar, Seng dollar, I think it really depends on the capital flows, and these are quite different for all these three currencies that we're talking about at this juncture.
Joey, great to have you with us this morning. That was Joey Chu there, Head of Asia FX Research at HSBC in Singapore. And just as we've been discussing, actually there's been local media reporting on Alibaba and talking about a release that we could get to the Qwen 3 series. They're saying that they're going to be releasing Qwen 3.5 model on Monday. So just to sort of follow what's been a host of Chinese AI companies that are looking to get those eyeballs during the Lunar New Year break and releasing these AI foundation model updates. Alibaba, though, not really reacting much because you're still seeing that stock under pressure today. Two different stories. Briefly, it was added to the Section 1260H list. That's the Pentagon list on Friday that was then retracted. But also it was one of the companies summoned by regulators on Friday too.
Yeah, okay. Yeah, so it looks like markets are leaning. I think the point that Mark Cranfield made a few minutes back is salient at this point in time. You know, there's very little reason to take on substantial amounts of risk, even if you are getting incrementally good news because of the long holidays coming up. And certainly the proclivity to lean on negative news here is perhaps more pronounced given the seasonal factors affecting this market. That's just me buying time, basically. All right. Lots more on the way here. We'll have more on the markets coming through in the next hour, of course, of Bloomberg Television with, of course, Insight with Has there. When Pendle Group, Amy Patrick shares her outlook for fixed income. You had that massive move down in cash yields and treasuries on Friday. Much more ahead on the China show as well. Welcome back. U.S. Secretary of State Marco Rubio has downplayed the chances of a fracture in the U.S. and European alliance if Ukraine loses the war with Russia. He spoke exclusively to Bloomberg on the sidelines of the Munich Security Conference.
The Russians are losing 7,000 to 8,000 soldiers a week.
Yeah,
not wounded, dead. Ukraine has suffered extraordinary damage, including, overnight, and again, to its energy infrastructure, and it will take billions of dollars and years to rebuild that country. So I don't think anyone can claim to be winning it. I think that both sides are suffering tremendous damage, and we'd like to see the war come to an end. It's a senseless war. In our view, the president believes that very deeply. He believes the war would have never happened had he been president at the time. So we're doing two things. So obviously we continue. Look, we don't provide arms to Russia. We provide arms to Ukraine. We don't sanction Ukraine. We sanction Russia. But at the same time, we find ourselves in a unique position of serving as probably the only nation on earth that can bring the two sides to discuss the potential for ending this war on negotiated terms. And it's an obligation we won't walk away from because we think it's a very unique one to have. It may not come to fruition, unfortunately. I hope it does, and I think there are days when I feel more optimistic about it than others. But we're going to keep trying because that is, in the end, this war will not be solved militarily. It will be, in the end, it will come to a negotiated settlement. We'd like to see that happen as soon as possible.
Do you worry that if Ukraine loses the war, it's going to be a disaster for the transatlantic relationship? Because Americans will say the Europeans didn't provide enough arms, and Europeans will look and remember the meeting in the White House and Zelensky and Trump, and they will blame the other way.
That would ignore reality. Look, Ukraine, first of all, they deserve a lot of credit. They fought very bravely. They've received extraordinary amount of support from the United States to the tune of billions of dollars that pre-exist the war. In fact, Ukraine probably wouldn't have survived the early days of the war had it not been for American aid that came to them even before the war had started, with the Javelin missiles that disabled the tank formations.
I wasn't saying it was fair. I was just saying there's a possibility. You have to deal with perceptions.
No, but I'm not worried about that because I can tell you that I think history will understand it. But I don't think the war is going to end in a traditional loss in the way people think.
That was the U.S. Secretary of State Marco Rubio speaking exclusively with Bloomberg's editor-in-chief John Micklethwaite in Munich. And let's just take a look at how markets are faring in the session today because we've been talking a lot about Alibaba, but really a few different themes. Firstly, we've just had some local media reports. They're going to be releasing an update to the Qwen 3 series with the 3.5 model. So really just a very consistent theme we've seen from a lot of AI companies in China or tech companies in China looking to get those eyeballs in this holiday period with model updates. Of course, we're continuing to track, will we get anything on the DeepSeek front? Alibaba still, though, in the red today. We've got it being also summoned by regulators on Friday. Concerns that it was very briefly added to a Pentagon list as well that was issued Friday in the US. But that's the Alibaba story. Let's also take a look at some of the material stocks we're watching today. Jijing Mining, for instance, among those. But we are seeing these really moving to the upside in the session.
Yeah, well, for one, it's gold. There's the materials play, obviously, that's been very much in focus here. If there's anything, sort of any consistent theme that's held up on the China story with platforms obviously under pressure. Here's an interesting stat for you because I know Xiaomi is one of the companies that you like to cover. Share price of Xiaomi is actually fallen by 50% from the peak. So we bounced off. If you take a Fibbo retracement from the bottom back in 2018 to the peak last year, it's at about the 50% retracement level from that point in time. It's not down 50%, it's at 50% retracement level, just to be exact. Okay, and that goes into this rotation into value, AIA, China Life. I'll even put in HSBC, which is trading lower today. And another stat for you guys, HSBC is up by more than double, back to the point on Alibaba from Liberation Day. So who would have thought, right? 9 months back. Anyway, that's a look at the movers right now. Lots of closed markets, though, as well, to tell you about. This is Bloomberg.
It's 11:29 a.m. in Tokyo this morning. Japanese markets just about to go into their lunch break. You're seeing some downward pressure here. You've also got the yen under pressure and Japanese yields just moving fractionally so far today. But the big story really has been in the last couple of hours around the real GDP, which grew just 0.2% on an annualized basis. That was far undershooting economist expectations, or the median of 1.6% growth. Consumer spending as well slowing down to 0.1%. So there's a lot of concerns around the fragility of domestic demand, households as well, how they're continuing to cope with inflation. So exactly how the economy fares going into 2026 is the big question. A lot of that strength that we had seen was sort of like predicated on large stimulus, wage growth. So it's going to be a lot of questions as well. What happens with those annual wage negotiations that come up in the spring? But another GDP print that we got recently, of course, Taiwan has more than doubled its 2026 GDP outlook to 7.71%. That's up from 3.54% previously. The upgrade is on optimism the AI boom has room to run further and follows a final trade deal with the US. The prior outlook came before Washington agreed to slash tariffs on imports from the island. Taiwan now sees exports rising more than 22% this year. That's up from 6% before the deal. Big focus as well on other inflation prints this week.
Yeah, absolutely. In fact, just have a look at where we are as far as what we're tracking here this week. And I think it's worth pointing out, right? So Greater China's on holiday for most this week. Just a note as well, we're entering the last 2 hours of trading here in Hong Kong. So it's a very short session today. Now, just speaking of, right, on the macro and rate side of things, you do have rate decisions in New Zealand, Indonesia, and also the Philippines. So Southeast Asia will remain very busy towards the latter part of this week. And as far as some of the inflation prints are concerned, we're coming off one, of course, in the U.S. on Friday. December PCE is actually coming out at the end of this week, just sort of bookending this sort of 7 days of inflation prints there. So just something to watch. Also just coming out right now, GDP numbers out of Thailand. We're looking at, this is for 4Q, and of course that takes us into the full year. 2.4%, that's above estimates. And we're also looking at SAQ and Q coming in at 1.9%. That's also coming in better than expectations as far as Thailand is concerned. There we go.
Yeah, let's also take a look at earnings because we're really getting into the season now. And in Australia, we actually had Treasury Wine Estates reporting lower than expected revenue, citing US supply chain difficulties and adverse trends or consumer trends, rather, in China. This is the maker of the iconic Penfolds brand, and it reported a $458 million first half net loss. That compares with a $156 million profit a year ago. It's also suspending its interim dividend payment to prioritise preservation of capital and reduce leverage. A2 Milk has boosted first half earnings and raised its full year revenue guidance as sales in China continue to strengthen. The New Zealand based company now sees a mid double digit percentage increase in full year sales. That's up from low double digits previously. Sales in the key China formula market increased and were boosted by increased birth rates in 2024.
Right. Now, the reporting season, speaking of earnings here in Oz, shifts into high gear. In fact, this week you have Rio, you have BHP, the big mining stocks and big materials place there, seen as pivotal really to the country's rebound. Now, Bloomberg Intelligence says that both miners are actually set for earnings outperformance supported by this broader wave of commodity price inflation. Let's bring in our equities reporter, Carmeli Argana, here to talk us through this. So how is this result season going so far, maybe as something that could inform us about what this week looks like?
Yeah, so results season is quite mixed so far. As Annabelle was saying, we had Treasury Wine earnings earlier, which showed a bit of a disappointment. They had to cut their dividend. We also had A2 Milk earnings this morning in New Zealand, which was above expectations. I think what's interesting about those two companies is that they're both sort of anchored to the China market, and they're both sort of linked to China demand. And you can kind of see with those two companies how different companies will have different results based on those numbers. So results have been mixed so far, and obviously that will set the tone for the rest of the week, especially with the bigger companies that are reporting later.
Yeah, well, you mentioned, of course, being anchored to China, and of course you've got that with the mining majors, BHP and Rio Tinto as well, that are due to post their numbers. Plus, you've got energy companies like Santos. So, what are you thinking there, or what's your expectation?
Yeah, so BHP and Rio Tinto, these are the two biggest mining companies in Australia, and they will be very, very important to watch. With Santos as well, I think it's interesting to note that all three of these companies have been involved in M&A in some shape or another in recent times. So obviously BHP and Rio Tinto have recently made takeover attempts for Anglo and Glencore respectively. Shareholders will be watching for clues as to how these companies intend to step forward and return value to shareholders. We already had a little bit of a preview in their quarterly results recently that showed strong output with their iron ore and copper businesses. So those will still be in focus, but it's really going to be looking at the next steps for those two. Santos, it's a similar story. They were the subject of a takeover from ADNOC a couple of months ago. So it's really all about the strategy. It's really all about where to next for these companies.
Yeah, so I'm just looking at the data I have on my screens here. So it looks like we're about 10 to, let's call it 12% into the earnings season, obviously quite early on, but are any early trends or themes that have emerged so far?
Yeah, I mean, Australian companies are sort of operating and reporting in a very challenging environment at the moment. With the economic backdrop, we have inflation projected to stay higher for longer. We have the RBA, the central bank, starting to ease rates. So the economic outlook is a little bit darker at the moment. So what's key here is how these companies sort of execute their strategies and staying disciplined in terms of costs. So you'll see that a lot of the consumer stocks that are doing well on those fronts tend to be more favorably received by the market when they report earnings. We saw that with Breville last week. It's a different story with Nick Scali, and also even with JB Hi-Fi this morning. That stock was going back and forth between gains and losses as investors were trying to figure out what was key there. I think it's also important to note that results season is coming amid all of this volatility with the tech space and the software space. So that's also adding an extra headwind, especially for those software stocks. Last week we saw some big swings in AMP, Pro Medicus, Temple & Webster, all of these software-related stocks compounding negative earnings results from them. So we're seeing some of those play out already so far, but obviously it's key to see what happens next with the rest of the companies reporting.
All right, one to watch. Carmeli, fantastic. Thank you so much. Carmeli Argana there are out of Sydney for us, our equities reporter, giving us sort of the initial take on what the season so far has looked like and how that informs us of what is likely or not ahead. A reminder for our clients and Bloomberg users here that the Video Hub, the new Video Hub, is now up and running. As you can see on your screen, subscribers can explore live streaming. You have interviews, you have news, and all the programs, of course, across Bloomberg Television, documentaries, report analysis, and everything in between there. Check it out, bloomberg.com/videos. This is Bloomberg.
Chinese President Xi Jinping is emphasizing a focus on high-quality growth this year. That's in his annual speech before the Lunar New Year holiday. It's the second consecutive speech where consumption and innovation-led growth were named as priorities. For more, let's bring in our Chief North Asia correspondent, Stephen Ingles. So, Steve, yeah, I mean, we've seen that big focus on consumption repeatedly, and it's a bit of a difference, I guess, from the tone that was set last year as well.
Yeah, I think there was a lot of uncertainty going into last year. It was right before, or it was just as Donald Trump, of course, was taking over the presidency with the Lunar New Year happening in late January. So there was an emphasis in his Lunar New Year speech last year about defusing the risks and essentially also kind of combating some of the domestic risks in the economy, like the anti-involution campaign, the price wars, and things like that. These kind of things were not necessarily mentioned this time around. They talked about social harmony, stability, and again, in both speeches, not only this Lunar New Year holiday speech that was given on Saturday, but there was another speech which just printed over the weekend from the Communist Party's main journal, that's Jiu Shi, essentially outlining or basically a readout of his speech that he gave at the Central Economic Work Conference in December, which is a closed-door affair of top senior Chinese Communist Party officials. We got a bit of a state media readout at the time. We knew that consumption was going to be a priority. This time we got the whole speech. And again, he talked a lot about the super large-scale market of the Chinese economy as being an engine for growing the consumption economy, but also the innovation investment-driven economy, as opposed to what we really saw with the pillars of the economy last year was exports, right, and a continued very feeble reliance on property. Those are being de-emphasized right now until they find a significant solution, obviously, and a lasting solution, if there is one, to the property downturn. But those are the priorities that he outlined in his speech about the green transition, the property market, stabilizing that, employment, also a key one for migrants and for recent graduates.
I'll borrow your word, are stable. The relationship with the United States, this truce that we're seeing right now. We understand, of course, that Wang Yi and Marco Rubio met at Munich, in Munich. So how does what happened, and does that mean we're going to get that meeting finally between the two presidents?
You mean the summit?
The summit, yes, in a few weeks.
Of course, there's going to be lots of dialogue, and I think the readout from Xinhua news agency, state media in China, is that they need to increase their dialogue, and that again it makes sense. You're not going to have a summit in China unless there's deliverables for both, right? So they're not going to necessarily perpetuate the ill blood, the bad blood between the two of them. They're going to find some common ground and build on that, and maybe make a lasting truce. Because keep in mind, in December, essentially, they agreed to a truce of about 1 year. Is there area where they can find deliverables for that lasting truce? Now, in an exclusive interview, again, we've been playing this throughout, between Bloomberg's editor-in-chief, John Micklethwaite, and Marco Rubio on the sidelines of the Munich Security Conference. They not only talked about the U.S.-European relationship, which has had some difficulties, but also the U.S.-China relationship. And in particular, Micklethwaite asked Marco Rubio essentially whether he was worried about Mark Carney going to Beijing, Keir Starmer going to Beijing, Friedrich Merz soon going to Beijing. We had Emmanuel Macron last year in Beijing. Is he concerned that this is showing the alliances, the strong alliances that America has with these NATO allies are maybe drifting closer to Beijing? This is what Marco Rubio had to say.
In this very forum yesterday, I met with my counterpart, the foreign minister of China. So we expect nation states to interact with one another. I think it would be irresponsible for great powers not to have relationships and talk through things, and to the extent possible, avoid unnecessary conflict. But there will be areas we'll never agree on, and those are the areas that I hope we can work together on.
Now, separately, the Chinese Foreign Minister Wang Yi was very active in Munich as well. He did bring up the issue which has really been damaging China and Japan relations, and that is those comments, of course, the Prime Minister Takaichi-san made about Taiwan and whether that was potentially, if it was invaded, whether that would be a survival-threatening situation for Japan. She has not backed down on that. Wang Yi is doubling down on his threats, saying there needs to be an apology, there needs to be a retraction of those comments, and that Takaichi is essentially, in his words, bringing up the ghosts of militarism again, and that is going to be a very dangerous situation.
Yeah, and interesting as well, just the timing of the meetings coming up, because Takaichi, of course, going to Washington to meet President Trump just before Trump meets with Xi.
Well, that's a very interesting balancing act that Donald Trump has to play. Japan, obviously a key ally in this part of the world. And what message does Trump have for Xi on that front?
All right, Steve, thanks very much. So it was our Chief North Asia correspondent, Stephen Engel, there, and some other top global headlines that we're tracking today. China says it will allow visa-free travel for Canadian and UK citizens starting Tuesday. Nationals of the two countries holding ordinary passports may enter China visa-free for business, tourism and family visits for stays of up to 30 days. The policy will remain in effect and until at least December 31st. French President Emmanuel Macron will attend this week's AI summit in India as the two countries continue to deepen ties. Macron's official schedule also includes a meeting with Indian Prime Minister Narendra Modi. His visit comes after New Delhi approved $40 billion worth of arms purchases, including more than 100 French fighter jets and missiles.
Let's have a look at what's happening in Malaysia, especially on Sunday. If you've sort of seen some of the scenes locally there, you have hundreds of Malaysians rallying in KL on Sunday, demanding the arrest of anti-graft chief Azam Baki. Now, it comes down to these alleged improper shareholdings and abuse of power. Let's bring in our Chief Asia correspondent, Rosalind Matheson, who has more details for us. Ros, why don't we get started with just the basics here? What is So what is he being investigated for effectively here?
Well, as you're saying, there were these protests yesterday, and they're against the anti-graft chief in Malaysia. The allegation is in Bloomberg reports as well, is that he actually had shareholdings that were worth more than a public servant is allowed to have, valued more at least as of February last year. And also as a public servant, you have to declare your interests in these investments when you buy them, when you sell them, or at least every 5 years. And was he also doing that? And so the allegations there have caused the government to say that Cabinet will have an investigation into him. That's going to be led by the Attorney General. But it's not the first time these allegations have been raised against the anti-graft chief. There were protests back in 2022, similarly over questions about his investments, his holdings in companies. And obviously in a strong position as the anti-graft chief in Malaysia, which he's been in for quite some years. Does he need to make sure that he's separate from these kinds of investments? Because again, he needs to be showing that agency is leading the charge in terms of looking at the behaviour of people and their own investments. So now we've got this investigation going on into him. It's unclear how long that's going to go for, obviously unclear what it's going to produce. He says, of course, he's got nothing to hide. He said he's very happy for people to look into his own investments and his own business affairs. But it does raise those questions again that investors have looking in Malaysia, a long history of corruption, a deterrent to investment, and questions for business is anything really changing?
Yeah, so what's the next step then, given you've got these protests, but at the same time Azam pretty much trying to rebuff all allegations?
Well, that's right. You've got this investigation going on. You've also got questions over his tenure as the head of the Anti-Graft Commission, because, of course, he's been extended several times by the Prime Minister, Anwar Ibrahim, even though he's over the age of retirement for a public servant in that role. And his term comes up again in May. So all eyes will be on whether the Prime Minister tries to extend his term again, or whether that's the end of his time at the head of the Anti-Graft Commission. And then in that case, who comes in after him? But there are broader questions, not just about him, but about the Anti-Graft Commission in general, and the actions of the government in trying to clamp down on corruption. I mean, Anwar Ibrahim came to power vowing to root out corruption. 3 years in, there's allegations also against the Prime Minister. Is he using the Anti-Graft Commission to go after some of his political enemies, former Prime Ministers, for example? So a lot of complex questions there about Malaysia. And again, for investors, fundamentally, wanting to see clarity about whether they can have security of their investments in the country.
Ross, thank you so much. Rosalind Matheson there in Singapore for us, our Chief Asia correspondent, on the latest that's come through so far out of Malaysia. In fact, just speaking of here, look at Malaysian markets, Singapore, of course, Ross, and also you have the Philippines also trading right now. And just to also mention, we talked about this in case you missed that, 2 rate decisions in Southeast Asia this week toward the latter part. That's, of course, on Thursday, coming through out of the Philippines and also Indonesia. Right, brief look at Southeast Asian markets. Why don't we? Anyway, we'll take a short break. See you on the other side of it. Right, welcome back to the China Show. An update here. Okay, this one keeps giving. So Warner Brothers Discovery is said to be considering reopening these sale talks with Paramount Skydance. Now, our sources say Paramount submitted amended terms last week trying to topple the existing deal with Netflix. Now, the new offer includes Paramount covering $2.8 billion fee that's owed, of course, to the streaming giant if Warner terminates their agreement. Now, Warner had agreed to sell its namesake studio and HBO Max streaming business to Netflix in an all-share deal.
Yeah, and those talks on what could be one of the biggest M&A transactions in Hollywood come amid the release of a new AI video generation model in China that really could actually end up disrupting the media sector. TikTok owner ByteDance on Saturday upgraded its flagship Douyin Seed, which goes head-to-head with products from Alphabet and Anthropic. Last week, it also launched its Seedance 2.0 video model, a competitor of OpenAI's Sora. And actually, this is a video that you can see here, generated by Seedance, that's going viral online. So this is Brad Pitt and Tom Cruise fighting, and this was posted by a user on X. And actually, it came with the caption that this was created by a 2-line prompt in Seedance 2. So there's, obviously a big concern around the quality of these sorts of video models that are continuing to get better and better, essentially. Just until a couple of months ago, or around about that point, it was quite glitchy and clunky. But now, I mean, this is really quite impressive technology.
No, it really is, and so I'm racking my brain if they've ever starred recently in a movie together, right? Because that's the first thing you would think of. And I think it was, okay, I'm going to date myself substantially with this. I think it was Interview with a Vampire in 1994. But that's completely besides the point here, which I think is what we want to get to here as far as the two is concerned.
I guess your point there, 1994, certainly we weren't thinking about CGI of this sort of quality.
No. But the fact that you could even produce something like, and we're barely scratching the surface as it pertains to this as well, right? It just underscores, number one, obviously security concerns, and the like. But yes, I mean, this just comes on the back of the broader trend we're waiting for. And, you talked about Alibaba and that local report just literally a few minutes back that they're launching separately, of course, their own Qwen 3.5 model comes ahead of this holiday when we're expecting separately large speculation around perhaps DeepSeek giving an update to theirs, possibly too.
Yeah, I mean, right? We've seen a lot of foundation model updates, and that's more on sort of the text prompt models. But video really represents a new frontier, essentially, because this is really a chance for companies to look to monetize their AI operations. And you've seen, for instance, the sheer outperformance we had of Kuaishou, for instance, last year, off their Kling AI app, essentially, that's also heavily integrated. It takes pretty much as much revenue that it has in China. It's also taking already in the US and is already working as well with studios in Hollywood.
I mean, it changes the ball game completely when you look at how it changes the business model, right? And the traditional cost inputs that go into producing a movie, right? And you can have the two A-lister Hollywood superstars like that without having to pay them. Well, I guess.
And that's why you get the big pushback from Hollywood and studios being very concerned about artist rights and exactly what the future holds. But like we've seen disruptions across every sector, the film one is not exempted. More ahead. This is Bloomberg.